Hey everybody, welcome to Trading Capital's daily analysis video. I'm your head market analyst here, Curtis Scouten. Jumping into the charts on this August 16th. What a wild session, not particularly in the indices, although they were very volatile in a sense, especially the intraday action, which we'll discuss. But touching on the meme stocks, what a crazy day to be a trader once again. And these opportunities don't come around often, but they certainly have been coming around more so in 2021 and 2022, where we active traders have an edge to either buy oversold names or short overbought names. And that's certainly what we've done. But touching on the S&P 500 first here, the interesting thing about the SPX here is we were analyzing it yesterday and saying that we needed to touch up and float the 200-day moving average on the SPX, and that's certainly what happened today. The markets were a little bit weak earlier on, and then they just started to float up on the light volume, which light volume tends to favor upside bias. And look what we hit to a T. Not only did we tag the 200-day, but we kissed this down sloping resistance parallel line. So this is going to be major resistance. Not only do you have the 200, this down sloping parallel line in orange, you also have this up sloping parallel channel, which you have just been touching on and kissing and hugging that area for the last 3 sessions without really making a truly meaningful close on a higher high. So to me, I think we're at the resistance point. I think many people are liquidating their longs at this point because now we've tagged the 200-day, and many people are unsettled. Is this truly a bull market? Are things going to continue? I'm in the camp that we start seeing consolidation now to the downside. At the minimum, I see indices coming back down to over here. You'll have support around this 41.77 level. And then I do think you have to fill 2 gaps. So you have this gap fill over here around 42.09, which you'll have some minor support. But then you'll also have support in here. So I don't think we're going to break down past these 3 support zones within the first, decline in the indices. You never know what could happen, but I do think you will have support in and around this range. But even with the spiders pulling back just to this bottom gap fill, that will definitely increase our profits in our short exposures. Just a mere, I think, 3 to 4% drop from this high to here will certainly give our short positions a boost. And honestly, I do think from the time that we sell off from up here and get down to this gap, you could potentially get a small little bit of a technical bounce off of that level before inevitably rolling over, in my opinion, and starting the next down leg. So the price action could look something along the lines like this, where we come down, bounce back up, and then start to roll over more so into the September period, where the volume typically starts to pick up, where the big boy traders are back from vacations with their families, kids are back in school, and honestly the summer doldrum volume should abate once that fall season typically comes into play. So I'm still positioned for more downside in the markets. I do think we've had an impeccable run. This is classified as a true bear market bounce. If you consider us to be in a bear market, which I do, and considering, if you just simply draw a trend line, which this is more of a speed line, just the degree of nature of this trend line, the speed line, is so steep that it requires a lot of money to continue to flow in to keep these markets propped up. And if the volume wasn't so light, I do think these markets would have broke down already. But nonetheless, SPX tagged the 200 into massive resistance. I would expect at the minimum a retrace, a pullback to this 41.80 level, and that's going to be your level of support that I think a lot of traders and people will be watching and potentially buying the dip. If we look at the SPY intraday action, the interesting thing on the SPY is we did tag the 200 yesterday, but we closed slightly above it today. But if you look at the intraday action, this sell-off occurred as soon as the SPX hit the 200-day moving average. So this is a pretty nasty sell-off. You've had a 1, 2, 3 bar surge to a low. You did hit this wedge pattern formation that I've been watching. So if I flip to the 30-minute chart, or actually let's go, 30-minute chart, you have a pivot here back in June of 28th, which connects to a pivot over here, which connected to your pivots over here. And then you basically broke out of this channel, but it was reversed with severe sell pressure as soon as the SPX hit that 200-day moving average. So I do think the fact that we're now trading back in this wedges when they break out, they do favor a strong move to the upside. But when you have a failed breakout in a wedge pattern, in a rising wedge pattern, this typically favors a sharp move down. And considering this looked to be a breakout, and it turned out to be more of a fake out with this massive sell-off back to the down range, if you flip on the hourly chart, you do have a nasty, nasty reversal candle over here. And that's certainly going to add a little bit of pressure on the indices. I do think that you're forming this inside bar bearish consolidation. And the important thing about this candle on an hourly basis is this is a bearish engulfing candle, because this is where you look like you were breaking out on an hourly basis. And this is the importance of using the larger time frames as confirmation to executing and setting up your trades. A lot of short-term traders would have confirmed a breakout on, say, the 10-minute, which they would be correct. You know, you poked above here, came back down, retraced, tested it, completely broke out, and then confirmed with 1, 2, 3, 4 positive candles on the 10-minute basis. But if you simply look on the hourly basis, those 10-minute intraday candles are nowhere to be found, and they were completely engulfed by this bearish engulfing hourly candle. And now you are forming this on a short-term basis, this inside bar bear flag, which does favor a move to the downside. Now, in terms of support, where we're going to be looking on the indices, you'll have some support around here, around this 424 on the spiders. That was a previous pivot back in around August 11th. So I do think that is a key area. You also have a gap fill zone over here around 420, which will also coincide around very closely to that 50% retrace. So this rising wedge is bearish in my opinion, especially when you have a failed breakout attempt that has taken you back to the low end of the range. You bounced off the lower end, had a technical bounce to the high end, and now you're looking to break down and close below that wedge. So that's kind of what I'm looking for, is a close outside of this wedge on an hourly basis will certainly signify the probabilities of more downside ahead. But nonetheless, these markets are extended on borrowed time. If we look at the QQQ, same sort of a thing. If we flip to the intraday action, wild session earlier on, you had weakness in the morning, a rally in the afternoon around that 12 time frame where the volume just lightened up and the markets just floated, checked back, floated up, made a new high, but you were not able to close above yesterday's previous intraday high or closing high for that matter. So that is something to truly note. If we flip to the daily chart, you can see where the resistance is. The interesting thing about this is that you made a new high today and you could not hold that high and you closed below yesterday's high, and it also just so happens to coincide with this parallel channel. So nonetheless, the Qs are seeing a little bit of relative weakness in comparison to the other indices. So the Qs did finish down today 0.23%. The S&P 500 just finished up 0.2%. And the Russell, if we look at the IWM, I think the IWM is fascinating as well, because again, you could not close above yesterday's previous high. So that is something to note, that there are sellers stepping in slowly but surely. And the fact that you were able to not hold yesterday's high in a very, very light volume environment with a bunch of stocks, you know, making very strong pumps to the upside, specifically the meme stocks, just shows that these markets, I think, are in for at least a healthy consolidation period if they want to sustain any sort of highly probable chance of moving to the upside. So it's not saying that these markets can't go up higher, but they need to consolidate. You can rarely have a move like this and without any consolidation before making another move higher. You know, it's simply, if we look at the IWM, where you also had, you know, this sharp move up here, there was really not enough consolidation, and the consolidation actually broke down, started your next leg. So we have to consolidate. Consolidation is key. Let's take a look at oil. Oil is basically still at support. You did retrace and you've come back down really hard. Nothing really new to report here. It does look like you're eventually going to get to that $85 level, but since you're consolidating above it now for, you know, not just 1 or 2 sessions, but a few sessions over here, this support level is not going to be that great, in the sense that you will likely not get that big of a technical bounce, and we may have to look lower on the charts. Natural gas is a powerhouse yet again. It's looking to retrace the full topping tail over here that was put in the end of July. So again, you're still technically inside of this topping tail, and a natural retrace does usually happen, especially when a high-flying commodity that has a lot of fundamental backdrops pushing it higher. So you are in a 1, 2, 3, 4, 5, 6 day time count. The 7-day, when you can already see that this 7th candle day is just starting, this does favor a pullback. Since you've had 6 positive days up, you do tend to see the 7th days in somewhat of a pullback. And I'm still comfortable with our short on natural gas. I'm looking to add to our potential short at a pierce of the double top here. I think that'll be a terrific add to the KOLD. We're slightly out of the money on the KOLD, but natural gas moves very quickly that I'm very, very comfortable accumulating, at this 967 pierce and this 1045 pierce. And we won't even have a full position at that point in time. But I do think natural gas will start to come down, especially since oil typically leads the natural gas lower. And I know there's a lot of speculation around Russia raising natural gas prices and shutting off the pipeline still, but overall, if you look at the data sets, the whole of Europe is making combined effort to use less natural gas, which should, in theory, lessen the demand and increase the supply. Now, if you also look at their build levels actually have enough natural gas to get them through this winter. So I do think the Russia squeeze on natural gas for this heating season is a little bit overdone, in my opinion, considering that reserves are full in Europe, and especially around Germany. They are good to go for this heating season, along with all of the other adjustments they've made with regarding burning wood and implementing different energy source uses like coal mines. I do think they are prepared to handle this heating season, even if Russia does cut them off. Now, the next heating season will be certainly something to keep an eye on, because if Russia keeps persisting with shutting down or reducing supply, then that certainly will put added strain on Europe and especially Germany. So let's just continue to watch natural gas and see how the price unfolds. Let's take a look at gold. Gold was interesting because the US dollar was up on the day slightly, and then it kind of reversed, but gold is just still consolidating. You did have a nasty down day a few days ago, but again, you're still holding this bullish consolidation. Gold has tagged resistance, so it's weakened that resistance level at 1805, this downsloping channel. So if the US dollar starts to roll over, gold will likely catch a bid, but it is going to need the US dollar to roll over. And you can kind of see that the US dollar was strong, and it has not confirmed a breakout on this downsloping channel. So that was kind of the thing I was looking for, the signal, and it looked like it was going to confirm a breakout early on in the session. That's the importance of waiting until the full trading day is done and you get that daily candle confirmation, because this is not confirmation. This is actually negates the potential breakout, and now we'll have to see if we can form another positive candle tomorrow and then a secondary confirmation after that. But the breakout has not been confirmed. This is actually a reversal signal on the dollar. This is kind of an intraday daily topping tail, so to speak. So, considering the dollar has had that reversal, it should provide potentially that backdrop for gold to move higher. Let's take a look at Bitcoin. Bitcoin, I'm kind of interested in, because it is kind of showing, despite the indices having nothing but positive days, the last 3 days Bitcoin has had 1, 2, 3 down days. So that is certainly something to keep note of. Clearly Bitcoin is lagging the market, in my opinion, or it's just leading the market in the sense that Bitcoin has had a strong rally up and now it's looking to curl over and roll over. And the question is this just consolidation, which in my opinion, it does not look like bullish consolidation anymore. This bear flag pattern, the longer this pattern stays within this channel and chops around, the more likelier that this bear flag pattern is going to break down. And this consolidation inside of this channel over here is actually getting kind of long in the tooth. If we have another 1 to 2 weeks of consolidation without breaking out of this channel, then the probabilities increase significantly of that next down leg. And it could look something like this, where we have 3 down days and then all of a sudden the selling commences. So we have to really pay attention to Bitcoin. It is on a timing aspect, in the sense that if the consolidation continues without making a move past and out of this channel, then it's not looking good for Bitcoin on a probability basis. Now, let's touch base on the meme stocks. So I just want to say amazing job. We netted massive gains today on Bed Bath Beyond. Let me just pull up BBY. What a crazy move. So these blow off tops are what us traders, day traders, swing traders live for. You know, these opportunities don't come around often, but when they do, you have to be ready, you have to be emotionless, and you have to be diligent at executing trades at the best technical levels to put yourself in a position to net a beautiful, beautiful profit. And we netted 19.6% on our BBY trade today. You can see we issued the short alert to all of you members this morning, and you know, I classified as a high risk around 11:56 a.m. this morning, after BBY was up 70 something percent, and we executed the short, almost nailing the exact high of this short. And let me just go over a couple of reasons as to why. Well, first of all, I've been watching this downsloping channel, which should act as major resistance. So that was the first level I'm watching. Now, typically with these meme stocks, especially in a lighter volume environment where you have the spiders kind of helping blowing wind at your back and giving extra boost, these meme stocks tend to overshoot technical levels. So most stocks, when they come up, would hit this level and pull off. So I was waiting patiently. I wanted to see where and how much the stock can squeeze up. And certainly this is a squeeze. This is a blow off top. You know, one of the most overbought daily levels that we have seen in a while, considering that this is in an environment where tightening has happened. You can see on the daily RSI, and I don't use the RSI often, but I do find it handy just to compare to previous blow off tops in these meme stocks. And we're right in line with all of these previous blow-off top speculation zones in terms of how overbought we are on a daily basis. And for us to execute a short right at the high by dollar cost, actually this one we didn't even dollar cost average in. This is just a straight boom, one-shot trade. And look at this sell-off that happened. You know, we executed on this candle. I remember issuing the alert, and you had a little bit of a pullback, a secondary retrace. So you still had even 10, 20, 30, 40, 50, 60, 70, basically 3 to 4 hours after I issued the short to come in the short again with trading capital, and not only basically pick it up at the same level, just slightly better than what I got at, and you would have netted a lovely, lovely gain. And we covered our BBY short at around 20, what was it, 20, I'm just looking at the notes here. So we covered it at 24.61, and basically that is all the way up over here, and we still netted a lovely gain. Actually, it might have been a mistake on my alert there. I think it was 22.61 I covered. Let me just see where 19% was. So we actually covered at 22.61. My apologies. I put 24.61. So we covered it at 22.61, which is right around this pivot over here. And look how further it dropped. We could have even squeezed out more, almost double the amount of profits. But you can't be greedy in these names. You know, a 19% on a day trade is just impeccable. That is something to truly be proud of. You know, on that day trade, I netted about $4,000 alone just on that day trade in one day. So these are the opportunities that you have to be ready for and willing to take. It is high risk, but fortune favors the brave. And if you can read the charts and analyze that these blow-off tops are not normal, it certainly proves to be a tremendous opportunity. Another meme stock that we were shorting today is FUBO, and FUBO has had a tremendous move off the lows. There is a chance FUBO can go a little bit higher, but nonetheless, when I see this type of volume, you know, 167 million shares exchanged, and when you have to scroll back, even during the times of QE, we haven't seen a bigger volume day than that. This is, as a technical analyst, and a first and foremost, I always put technical analysis before the fundamentals. Because what technical analysis is price action. That's all it is. And price action is the most important thing, even more important than fundamentals, because price action technicals determine what the price is likely to do in the near term as well as the long term. But the near term is where fundamentals mess people up, and technicals kind of guide you through that near term, medium term, and long term picture. But nonetheless, we started accumulating this FUBO short basically around this 592, and you can see my green levels where we just slowly inch in, you know, add a little bit more here, and we pick the top pretty much almost at these pivots over here. and that proved to be a tremendous last addition level. You know, I did have another gap fill level over here that I was willing to add at if it popped a little bit higher. That would have coincided with the 200-day moving average. So the reason why I think FUBO potentially could squeeze up is you do have this gap over here. I do think gaps are meant to be filled. And if you simply look at the indices, most of the indices and stocks have rallied to their 200-day moving average or above. So it does open the chance that FUBO can have a squeeze. But nonetheless, if you look at this type of reversal, and this reversal came into play when the SPX hit that 200-day moving average. So this is kind of another thing I was waiting for. I was expecting a reversal off that 200-day moving average, which we got. And now we're sitting in the money just slightly on FUBO with a half a day trade position. And we do have additional room to maneuver in the event that this does go higher. But I think FUBO is done to the upside. Typically when you see an outlier volume event of this nature that supersedes any of the previous last volume days for quite some time, I think maybe in its history, generally you won't find a bigger, sharper move past this day, at least until you see some consolidation lower. So standout volume days like this mean that a massive amount of shares exchange hands. You shook out the longs, you shook out the weaks. This was kind of a big time short squeeze. Many people were squeezed out of their short positions, forced to cover, and I do think we see more downside in the meme stocks. And it's just so interesting that these meme stocks tend to rally just as the major indices are into major resistance, like the 200-day moving average. It never ceases to surprise me that retail traders and institutions will, some institutions will chase these high-flying stocks higher right as the major indices are into huge resistance when they're likely to pull back. So again, I'm probably looking to cover my FUBO short. I'm going to have to see how it opens tomorrow, but I would not be surprised if we can squeeze another, at least 10% out of this trade. At one point we could have eventually taken, 13, 14%, but I do think we can head lower. And again, on a day trade, when we can net 12, 13, 14, 15, that is mega profits. If I make about 12% or 10% on this trade, I'll be making about, at this point in time, probably about $25 to $3,000 if I net a 10% or more gain. So I'm kind of looking for that. It's a little bit greedy for a day trade, but when you factor in how much these stocks have ripped up, in a bear market where conditions are not for these stocks, I would certainly not be shorting the stock down here if we were not in a tightening cycle. The only reason I'm comfortable shorting the stock in right now at these levels is because we are in a tightening cycle. And this whole move, you've already had an impressive move here, and this is a clear blow off top in my opinion, where you have massive people chasing this stock. And I do think it's a matter of time before we at least retrace back to this breakout zone, this 455. Imagine if we can net that gain tomorrow. This stock just collapses down to this 455 area. For a day trade position, that would be a 32% gain. I think I would make somewhere between $9,000 to $10,000 just on that name. So that is the power of day trading, the power of reading the charts, the power of patience, because people started shorting this stock very early and going in on all level, and we just dollar cost average in at key technical levels and waited for that inevitable pullback, and that's certainly what we got. And I love these stocks that have had massive rallies as the indices are into major resistance, and when you factor in mean reversion and rate of change theories, it certainly provides the backdrop for an amazing, highly probable trade setup. I think that's it for all today. Again, to summarize it, I do think that the indices are into resistance. We should see that pullback sooner rather than later. And I mean, considering the likes of Walmart, strong consumer names, they had a massive pop today. I was very close to shorting Walmart because interesting thing about Walmart is you retrace to the breakdown zone. So this is a pivot over here. You have a pivot over here. This is where you had your massive gap down, surge to a low. And now you've actually retraced perfectly to that original breakdown zone. So that is acting as major resistance. Not only did you retrace to that zone, but you also retrace to this major pivot over here. So you can see these two trend lines confluencing the same area, acted as massive resistance. I'm a little disappointed that I didn't pull a short, but again, we do have a lot of net short exposure where I do think we have enough short exposure in a variety of names that will basically provide the same opportunities moving forward. But if Walmart does continue to get a little bit of a float up, and considering it just had earnings today, there is a chance that it could retrace and come up a little bit higher, then I may consider pulling a short. But at this point in time, one day after earnings, we want to kind of give this the benefit of the doubt to potentially move higher. If you also look at Home Depot, they had a pretty rip-roaring day. Same sort of thing as Walmart. Look what happened. Breakdown zone, major pivot, major chops and pivots, retrace to a T. You hit the 200-day moving average. Clinical area to short if you're a day trader. I did not do this in the day trade room, but I was looking for it. And then to put in a third factor, you have this gap fill over here, which you hit to a T. So massive area of resistance for Home Depot as well. I'm not ready to short Home Depot. I do think Home Depot has a chance, if the indices continue to float up, to come up to this gap fill zone over here. And that would also coincide with the 50% retrace zone, which will be a tremendous opportunity to pull the trigger, at least start accumulating short. Well, that's it for today. Again, Matt, congratulations if you caught that Bed Bath Beyond trade with me. Mega profits. I think we're well positioned to also bank tremendous profits on FUBO. So let's start to see these meme stocks come in. I'm a little bit disappointed the ITB. I wasn't even watching it. It kissed my gap fill level where I did want it to add to our short position, just because it did pierce this downsloping resistance channel, which we've been stuck in basically since our early year sell-off. And I'm a little disappointed because I was not watching it and it pulled off of that area so sharply. So that is my apologies. I did mean to accumulate more of a short there. Maybe we'll get a push up tomorrow where I'll look to add there. But at this point in time, I'm not going to chase it and add at this level. I'd rather just hold our current position and see if we can get a float up. But nonetheless, again, there is a little bit of relative weakness in the home builders due to the fact that you made a new high today, could not close above it, and you closed below yesterday's intraday high. So again, tons of resistance all over the place. Look at this sharp move in ITB. It's definitely a very, very steep trend line to try to uphold no matter which way you look at it. And I do think the fact that we saw such a massive fast sell-off on the S&P 500 intraday action as soon as we hit that 200-day moving average just shows you the sentiment. That is clearly sellers stepped in very, very quickly, and I do think this is going to lead to more selling pressure as many people will realize that, hey, we've had a terrific rally, we're still technically in a bear market, and we're at major resistance without any sort of consolidation. There's pivotal gaps to the downside that need to be filled. There's not really any gaps to the upside other than maybe one up here, you can argue. So we've pretty much filled all the key technical gaps to the upside. Now we have to start looking to fill the key technical gaps to the downside. So right away, just the downside, I can see 1, 2, 3, 4, 5, 6, 7, 8. I can see 8 gaps to the downside. So when you factor in 8 gaps to the downside, that is like 8 different magnets pulling the price action down. And I do think we have to kind of be careful what intraday pattern is forming here. It's a little bit of a sloppy, but you could argue that this is a left shoulder, this is your head, and this is kind of a right shoulder forming. So the question is, if this is a head and shoulders, we have to wait and see where the neckline forms. But if we form a topping formation, these markets could look to be starting at least some sort of a hard consolidation to the downside, or potentially even worse, the next down leg. And I do think that next down leg comes sooner rather than later. At least within the next 1 to 2 months, we should start to see some ferocious selling commence. And we do have the Jackson Hole meeting in 9-10 days, so that should provide some Fed guidance. The Fed minutes come out tomorrow, which honestly is nothing really new. The markets may have some sort of a reaction to the Fed minutes, but honestly, it's all the information in the Fed minutes is from the last FOMC meeting. So it's just a transcript of all the FOMC, what was discussed in the last meeting, which the markets kind of already know and have priced in. So I think any movement on that FOMC minutes data is likely just manipulation around options X, because everything we have already heard and know from the last FOMC meeting is already priced in and digested by the markets. So don't put too much concern around the FOMC minutes, in my opinion. It's something that a lot of people do, and I do think that is kind of a waste of time, in my opinion. Nonetheless, thank you all for being members. Congrats on the profits. Let's continue to bank, and let's see when these markets start to roll over, because we are certainly ready for that.